And another thing you talk about, and we spoke about it in the piece that we recorded earlier, was this whole thing that you trade before 10 a.m. And then I think you said before that like only suckers trade after 10 a.m. What is the thinking behind that timing and that mentality? Because that's kind of intriguing for me.
So this goes back to how the big institutions and banks trade. So what they do is they have much more access to the markets when the markets aren't open, which a real person wouldn't necessarily know and doesn't have access to either. And so they're positioned before the market opens. So for example, if something happens in the Middle East with respect to oil, as it did recently with the Saudi Arabian oil fields being struck by drones, and that has a spike in oil, that has uncertainty in the Middle East, uncertainty with how that's going to manifest relative to the U.S. Lots of things are happening, and the markets are reacting. They're reacting when it first happens, and then they're reacting right after. And the big players are positioning themselves with trades to take advantage in very large size. And real people can't get in that really large size. And so what happens when the bigger markets open, and we talk about, and the model looks at what happens at the market open up to 10 a.m. for the U.S. market, so we're looking at U.S. markets when I talk about 10 a.m., is that all of those institutions and speculators and hedge funds that have positioned themselves because of news overnight and into the market open, they're already there, they're already set to go. And it's like the market opens and they're just, all of their orders get filled. And the small person is like, wait a minute, what's going on? It's like those little shark scrubbers with the shark. You know, sharks are coming and getting their trades done, and they're getting executed right when the market opens, and in a lot of cases in stocks before the market even opens, in pre-market hours. We're watching that in the model. And so the thing that happens up to 10 o'clock is a lot of that stuff basically filters out. It happens. We get to then analyze how it impacted the market in the very, very beginning of the day, sometimes as early as 9:30 when the market opens. But we take into account all of that large activity, and then we trade into that large activity. So again, we're like the little shark scrubber with the shark, and the shark's already gone. And we're now we're following, but with information.
Wow.
Before.
And this is something you use yourself on your own money, your own portfolio.
Yeah. I absolutely do, and a couple of things about that too is with 25-cent contracts, they're short term in nature. They last for generally through the end of the week that we're trading, and so one of the things I do is look on Mondays or Tuesdays in the beginning of the week, because that's when if something's going to happen, it has the most chance of happening well for the investment. And so that's what I do personally. I don't tend to trade much after 10 or towards the end of the week. So I really do look at the beginning of the week.
Interesting. That's where all the opportunities are.
That's where the opportunities are.
And again, a 25-cent contract, so you buy that option, so you have, you know your downside, but you potentially have unlimited upside or very high upside.
Well, that's right. So, for example, with what just occurred in the Middle East, we talked about a trade in an oil company that was probably going to do well because when there's any kind of issue with oil, the major oil companies tend to do well. So what we do is we look before the market, we position it, we look at the market open to see what the sharks are doing, and then we either issue a recommendation or don't, depending what we think is going to happen. And in that scenario, we did issue a trade idea for that event.
Nice.
Yeah.
And so people kind of log in, you kind of let them know what looks interesting, if anything, and when it does, they put in their 25-cent contracts when the opportunity presents itself.
Right. So
based on what the big sharks are doing.
Well, that's right. So we said, because we don't know, right? At the end of the day, we're watching them, but we don't know if they could be sleeping on the bottom of the ocean that day. We just don't know. But to the extent that they're in there, and we think there's an opportunity for a transaction, yes, we do ask for people to be ready just in case. Because these things happen very quickly when they do happen. You do want to get in as soon as we put out a trade recommendation, and then they have the opportunity to consider it and to potentially get into it.
I had Kim Kiyosaki in that seat, and she was saying, look, Brian, I only invest in real assets and gold and real estate. But she said, I follow Nomi Prins and her 25-cent options, because she said, I understand that from a cash flow perspective. I put out this amount of cash. I know I'm not going to lose any more than that, but I've got a big upside. So right. You got a fan in Kim, I know.
I know, Kim is amazing, and it's funny, we've actually worked together on things, and I agree with a lot of how Kim looks at at assets, and hard assets are very important. They're a very important part of anyone's portfolio, and looking at things holistically from the standpoint of real estate, where you can either live or get rental income, so that's a real hard asset. Any type of sort of longer term asset, like gold or precious metal, or something that's actually utilized in things. So there's a physical nature to it as well as a financial nature to it. And then yes, what I do is also look at markets, and I very much do quantify that downside, which is why I do like these 25-cent and inexpensive options, because I know at the end of the day, not every trade is going to make money. But I prefer knowing what my downside is, so that I know when the trades that make money do make money, I can balance those things off, and net I'm positive. But I can evaluate where I might lose something on any given day relative to what I gain on all the other days. And so I can balance it that way, because again, since leaving Wall Street, I don't get the same, paychecks that I got on Wall Street.
Same big bonuses anymore.
Well, exactly. So it's very important for me to preserve what I have, as well as to allocate it and then invest it properly. And so the idea of these 25-cent options and these 25-cent contracts is to be able to do that. And that's what I do with my own money, and that's what I do with this system and with this product.
And it's been very successful. So people are really having their eyes wide open as to what this can do to their portfolio, and making some pretty big gains as well, right?
Yeah, the gains are very big, because again, it's that momentum. Think of that shark again. If the shark continues in that direction, and again, we're there in the market when the volume and the momentum is most extreme, and we're alongside that, and looking at other parameters as well. That's how the money is made. That's where that positive upside is, and that's where a lot of people have been able to make a lot of money, and sort of being a part of that initial start to the day in the markets in the right trades.
Yeah, and the right option at the right time can just be a massive investment. I mean, I traded options for a long time on Wall Street, and I learned about them when I was at MIT, and you just see, when you can understand them and limit your downside, it's a tremendous way to leverage and get big gains from the market.
Right.
And so we just talked about that. We filmed a separate video, so people can click on the link below or go to londonreal.tv/Nomi, Nomi, to learn more about it. I remember the first time I understood what a call option was. It was in 1991. I was at MIT in some classroom on a whiteboard with a friend, and I was like, we couldn't get it, and then I understood what it was, and it was a real groundbreaking moment for me, to see what they can actually do.
Yeah. And to an extent, there's the math behind how options work and how they price relative to where they're underlying, or where their share prices that they're associated with, and how things move and how much time they have left before they run out, and all sorts of different components of an option. But then there is also this idea that yes, they're very powerful in terms of leveraging what the market's doing anyway. And for example, someone might not have the money to buy an Amazon share because they're stupidly expensive, but you might be able to buy an option on Amazon, which can give you the same upside, but actually greater, because you're putting a lot less into that particular transaction.
Yeah. For people that don't understand, I don't know what Amazon shares are, but I'm guessing hundreds of dollars. But with a 25-cent option, especially a short-term option like a week or something, you can get kind of the leverage of a bunch of shares, and if there's a move, you can make massive amounts on your initial investment without having to invest in that core asset.
I think that we're starting the beginning of a prolonged period now of a recession or even worse.
Hi, it's Brian Rose from London Real. I recently sat down with Nomi Prins, the former Wall Street trader you would have seen on Fox, CNBC, and Bloomberg Television. She regularly advises the Federal Reserve, IMF, and World Bank on important financial policy matters.
I've realized over the years that people don't have the same exposure to trading systems on Wall Street. And so I looked at what are some of the ways that I can create something that regular people on the ground can use to access some of what Wall Street does all the time.
We had an incredible conversation, but what really stood out to me is her brand new 25-cent contract strategy, designed to leverage a little-known market anomaly that happens every day around 10 a.m., if you know what to look for.
The more comfortable you feel with financial elements, the better you'll be at managing them, and the more confident and empowered you'll be in your own life in any aspect of your life, not just with respect to money.
Now, as a former Wall Street trader, I am super excited to share this investment strategy for the very first time. As the host of this episode, I'm able to offer you exclusive rights to a seat at her 25-cent contract live training. But you must act now to secure your spot. So click on the link below or go to londonreal.tv/Nomi, that's N-O-M-I, to secure your spot. And I will see you there.
I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, not what happens if a trade works, but what happens if it doesn't work. What are the risks you should be looking for, and how can you best sort of protect that investment for those risks. And so that's a lot. They're a very cheap way of taking an investment into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and presents a way for a person to take advantage of that scenario in a cheap way, and in a fast way, and in an easy way.